Hi there traders and investors, today is Tuesday, December 12th. I'm online with a regular market review prepared for InstaForex. Apart from my video, the highlight of the day is US inflation data. This is not everything. Tomorrow, the Federal Reserve is due to announce its policy decision. I have some trading ideas which I'd like to discuss with you. Let's go. As usual, we're opening our review with gold. It has been trading lower. The price has tumbled by 1,500 pips for 1.5 weeks. The metal left an interesting target at 2042. I expect it to be hit at least with a false breakout. The price has plotted a twist on the chart. Curiously, we could earn from both long and short positions. Besides the upward target, there are a few downward targets left by kind market makers in March and October. If these targets were hit according to my plans, I would become a genius analyst and all of you would become comfortably well off. You could leave following the motto, "Don't worry, be happy." Now let's speak about the euro-dollar pair. It has been trading according to our bullish trading plan. I devised this plan on the grounds of the US non-farm payrolls released on Friday. I suggested opening long positions on Friday and Monday, though some traders didn't enter the market. The accumulation zone was thick. The price saw a spike, a retracement, and then a three-wave structure. Those who went long set a stop loss 7 pips down and a take profit 60 pips up. A profit-loss ratio is roughly 10-1. The first point of fixing long positions is the swing high of December 7, which pushed this instrument steeply down after the NFPs. So my trading idea has been implemented partially. What's wrong about it? Short sellers who set their stop losses after the NFPs might be above the high of December 7. It's the second target for long positions. My friends, the instrument also offers selling opportunities. The price indeed went down from the swing high of December 7. I want to see a three-wave structure and new swing high. I assume swing lows could be tested, but it would be a perilous gift. There's also a downward target, so we should not go long too low. A stop loss should be 12 pips down, no more. All in all, I'm planning a bullish scenario. What about the pound sterling? I'm also poised to follow a bullish trading plan. The pound-dollar pair is putting pressure on yesterday's high and today's highs. There's no swing high yet like in the euro's case. These currency pairs depend on the dollar's dynamic. The euro and the sterling are of secondary importance. The news on the EU and the UK is also neglected. The top priority is the greenback. What do I expect for the pound? If the US CPI is poor, the US dollar will turn weaken. Hence, we will see a buying impulse. If so, we could open long positions during downward retracement with an ambitious bullish target. The Australian dollar has been growing. The US CPI could be strong today. If so, the AUD-USD pair will slump following the data. A recovery will happen later on, thus, you may set a tight stop loss and go long. I see a huge bullish potential. I mean, the price could update the high of the last week and eventually the ambitious target of 0.69. That distant target is almost 400 pips up with a stop loss of 40 pips. The profit-loss ratio is 10-1. For example, you're betting $1 million and will earn $10 billion. The USD CAD pair is trading in a weird way. It drops and rebounds. There are clusters of stop losses both up and down. I don't have any trading ideas. The dollar-yen pair is trading lower from a swing high of the last week. The overall selling impulse is not broken yet. At least on the 4-hour time frame, the buy scenario is over. The buy stop losses were activated. I'm not going to trade the yen now as I have trading plans for other instruments. I'm waiting for the inflation data. That's all for today. See you online soon and good luck.